to Colin's Keys to Real Estate.
Welcome back to Conan's Keys to Real Estate, unlocking Utah's real estate secrets, one key at a time. I'm your host, Ryan Conan, a full-time realtor at Real Broker, helping buyers and sellers in Twila and the Salt Lake Valley. In the last episode, we discussed optimizing cash flow and equity. Today, we focus on tax strategy for growing portfolios. Taxes can make or break long-term success, yet many investors overlook how much control they actually have. Understanding depreciation, cost segregation, and timing strategies allows you to keep more of what you earn and reinvest it efficiently. Taxes are not just a compliance issue. They are a powerful tool for portfolio growth. When approached strategically, they allow you to increase cash flow, accelerate wealth accumulation, and protect your investments. Why tax strategy matters. Every investor pays taxes, but not every investor uses taxes as a growth tool. Strategic tax planning improves monthly cash flow by reducing taxable income, protects your equity from unnecessary depletion, allows smarter decisions about property acquisition, renovation, and sale, reduces the risk of surprises at tax time. Ignoring tax strategy is like leaving money on the table every year. Even small adjustments can add tens of thousands over a portfolio's life. Core tax concepts for investors. Depreciation. Depreciation allows you to deduct a portion of your property value each year, reflecting wear and tear. Residential rental property is typically depreciated over 27.5 years, and commercial over 39 years. Example: you purchase a rental property for $300,000. Ignoring land value, you might deduct roughly $10,900 per year as a non-cash expense. This reduces taxable income and increases cash flow. Depreciation is a hidden advantage that many new investors overlook. It allows you to reduce taxes while your property appreciates in value. Cost segregation. Cost segregation accelerates depreciation by separating components of the property into shorter-lived categories. Items like appliances, carpeting, and landscaping can often be depreciated over 5, 7, or 15 years instead of 27.5. Example: a $300,000 property might have $50,000 allocated to components that can be depreciated faster. This front-loads deductions and reduces taxable income significantly in the early years, improving early cash flow and reinvestment potential. 1031 exchanges. 1031 exchanges allow you to defer capital gains taxes when selling one property and buying another similar property. This strategy preserves capital, accelerates portfolio growth, and prevents losses from being taxed before reinvestment. Example: you sell a rental for $400,000 with $100,000 gain. Instead of paying taxes immediately, you reinvest into a new property of equal or higher value, deferring the gain. Timing, income, and expenses. Strategic timing of income and expenses can optimize tax positions. Prepaying deductible expenses or delaying rental income can shift tax liability to a more favorable year depending on your situation. Entity structuring. Holding properties in LLCs or partnerships can provide liability protection and sometimes offer tax planning flexibility. Consult a tax professional to determine the best structure for your portfolio size and goals. Practical example: multi-property portfolio. Imagine you own 3 rental properties generating $4,000 per month in cash flow. Without strategic planning, your taxable income may significantly reduce the effective cash flow. By applying depreciation, a cost segregation study, and careful timing of repairs and improvements, you could reduce taxable income by $30,000 to $40,000 per year. This saves thousands in taxes, increases monthly cash flow, and gives extra capital for reinvestment. The difference between reactive investors and intentional operators is not in the number of properties, but in how efficiently they manage taxes to maximize net returns. Common mistakes in tax strategy: overlooking depreciation or failing to track improvements, ignoring cost segregation opportunities on new properties, paying capital gains taxes unnecessarily due to lack of planning, not using tax-deferred strategies like 1031 exchanges when selling properties, treating tax strategy as an afterthought instead of a growth tool. Even small errors or missed opportunities can cost more than most investors realize. Strategic planning allows you to retain more capital for growth and increases portfolio resilience. Tying it all together, tax strategy is not about avoiding taxes. It is about using the rules to your advantage. Every deduction, every deferral, and every properly timed decision compounds over time. Understanding your options allows you to maintain cash flow, protect equity, and reinvest more effectively. A tax-savvy investor does not simply react at tax time. They plan continuously, considering depreciation, accelerating deductions where appropriate, using 1031 exchanges to preserve gains, and optimizing entity structures for both liability protection and tax flexibility. My final thoughts. Taxes are one of the greatest levers in real estate investing. They can accelerate growth, improve cash flow, and protect long-term wealth, but they require intentional planning, attention to detail, and ongoing management. Investors who leverage depreciation, cost segregation, timing strategies, and 1031 exchanges effectively are able to retain capital that others pay away. Every property, every expense, and every gain should be evaluated not only for immediate impact, but also for long-term tax efficiency. Remember, effective tax strategy is not optional for serious investors. It is a fundamental part of portfolio management and scaling. The more you integrate these strategies into your operations, the stronger your financial position and the more freedom your portfolio provides. In the next episode, we will cover asset protection and long-term planning, including entity structuring, insurance strategies, and estate considerations, to ensure the wealth you build is safeguarded for the future. This is Conan's Keys to Real Estate Unlocking, Utah's Real Estate Secrets, one key at a time.